Hey, it's Navy Dowdy here in the Chicago area in the Midwest in the great United States. This week we're going to talk about people complaining about taxes. Let's face it, everybody complains about taxes, but the truth is that most avoid planning better outcomes. It's human nature, of course. We complain about our wait while in line at the ice cream stand. We complain about being tired and then stay up late playing the latest game on our smart devices. Humans are funny and contradictory animals, aren't we all? Have you ever noticed that when you're in a conversation, people are quick to complain about their taxes? Many people who complain about their tax bill are actually paying very little compared to most folks. However, some people pay a lot of unintended or surprise taxes. For example, we see a great deal of self-employed folks. They will tell us, I pay too much in federal or state income taxes. But on review of their 1040 form, they actually paid no federal or state income tax at all. The tax they're actually paying is self-employment tax. Most lump them together and treat them as the same animal, but they're truly two different things. By incorporating, the business can avoid all self-employment taxes. Even after doing formal payroll and paying FICA and FUTA through payroll, they can still often pay far less in self-employment tax, since corporations can loan money to owners, pay dividends, and use other structures that do not generate W-2 wages. Why don't more self-employed people incorporate? Often, somebody gave them some free advice that's limited to a smaller scope of understanding, or they just aren't qualified to give advice, but still do so anyway. You know all those people. Another mistake we see a lot are wage earners who perceive that they are paying a lot in tax and they are contributing to a 401k or other plan at work. Saving for retirement is good, and taking advantage of employer matching money is really good. In fact, it's great. However, many of those folks, upon closer examination, because they have kids, child care and health care expenses, dependent parent expenses, spousal business losses, and on, are actually in a low tax bracket, but are using a pre-tax 401k. Let's state that another way. They are paying an effective rate of 6% income tax now, but putting money in a 401k to avoid paying some of that 6%, so that in retirement they can pay the tax, which could be 20% or more. Should they not invest? Should they not take the free employer matching dollars? Of course not. Always take the free money. In this case, they should simply request to have the employer offer a Roth 401k and contribute post-tax money. Then they can receive the same free employer match money, but pay 6% income tax now, then in retirement take out all the money and all the growth on all that money tax-free. These are just two examples of tax savings opportunities that we've observed, but there are a great deal more we could discuss here. Instead, we'll simply urge everyone, eat the ice cream, play the latest app after bedtime, and you'll survive. But get to a tax planner soon to work on your tax issues, as without enough retirement saved the correct way, and with Social Security basically already seeming insolvent, you might not survive that. At least if you like living indoors. I'm Navy Dowdy, and remember, financial fitness can be beneficial to your wealth.